Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, let's go, baby. This video is for Tuesday, January 6th, 2009. Traders, last night I was brave enough to get out in front of this camera and tell you traders, look, let's get long if the S&P gets under 920 into the 9-teens. It got down to 916.5. We ended up buying them between 918 and 917. And then the market rallied to 934.5. We got out of the rest of, or most of the rest of our positions at around 932.5. With a green Omni, we made a couple of good trades. So yeah, baby, yeah. All right, now check this out. Omni on Monday is green. On Tuesday, Omni goes red. It flips. Boom. Goes right to red. And traders, I will say one thing. My own brand of technical analysis, I looked at the charts and said there is no way I would go short this thing. I want to buy it. However, Omni says we're going down. Omni has a very good reason why we should go down. And I'm going to show it to you on some charts in about a moment. Traders, right before the holiday, I had shown you, I illustrated on the board, plus brought up some charts and prepared you for this wedge formation that we had forming, and that the market usually has a 3-day little pop out of that, back down into it, and the market goes towards its natural trend. The natural trend at this point in time, as we all know in the S&P, is downside bearish, right? Yesterday's trade, we were coming out of the top of this ascending wedge for Monday's trading, and I thought we'd buy the first pop-up day. And I'll tell you what normally happens when you have a wedge ascending. The market breaks out of it for a couple of fake-out days and goes right back down. That is what I told you would happen on an ascending or on a wedge formation right before the holidays. Lo and behold, it's exactly what did happen, and the market went to the downside of that wedge, not the upside. Now, we're in the exact same situation. We have a wedge formation, it's ascending, and the market popped its ugly head out today, Monday. I say for Tuesday, you hit it and knock it back down. Omni thinks it's going to go down. Now I'd like to take you to the charts right now. Let me show you the technical reason why, the analysis behind that wedge formation. I'll show you last week's or 2 weeks ago before the holiday. I'll show you that wedge formation and what the result was. And then I'll show you the formation that we have today. Let's go look at the charts, traders. Okay, traders, what you're looking at now is the March S&P daily bar chart. This is the very same chart I held up in front of you prior to this year end, prior to the Christmas holiday. And I showed you this over here. I drew this myself. And I said, traders, most likely all you're going to get is a little pop that looks like this, and then the market will drop. Lo and behold, traders, it went up. It made that exact same looking formation and dropped down to the bottom of the ascending wedge, which is what we expected to happen. Now, traders, the market is doing something almost the same. Remember, I am showing you something that happened between 12/16 and 12/18 of December, right? Well, now that was this right here. Just so that you can see the similarity, you see what happened here. It actually filled in just like we predicted. So this did work. The analysis worked on that ascending wedge from, or I should just say the wedge formation from December. Now let's look at a chart that's updated till today, traders. Okay, traders, what you're looking at now is exactly where the S&P is today. Again, this same picture that we drew, and as you can see the note, it says traders, right before the holiday, I illustrated this very same failure pattern, which was this. The market did fail. We have that exact look right here, right now, as of Monday evening in the March Emini S&P. If this is going to happen tomorrow, the market will break down The Omni certainly turned around from bullish to bearish. Omni's pointing lower. There's a technical reason why we should go lower. Look at the similarities between this and that last chart you just viewed. And then do your own homework and see what you think, traders. But I have a feeling that we're going to play this the same way we played this and see if the odds turn out to be in our favor. I will tell you this, most times technical analysis has an uncanny way of repeating itself over and over again. I think we're getting a repeat here. Let's see what happens. Now a quick look at a couple of indicators, traders. Okay, traders, what you are now looking at is the daily slow stochastic indicator for the Emini S&P March contract. As you can see, the stochastics have gotten easily as high as they usually get before it breaks back down, and it's starting to put in a little bit of a hook up here. So this is pointing towards the downside. Looks like it's tired. Slow stochastics are saying that this rally most likely has come to an end. Let's look at one more indicator, traders. Okay, traders, what you're looking at now is the commodity channel index on the March S&P. And as you can see, once again, we're clearly even above the usual highs that you get to in the CCI before a breakdown begins. And it clearly has that hook right there, as you can see. It hooks over and is pointing lower. So you have technical indicators in the S&P market, in the Dow Jones Industrials, in the Dow Jones Transportation Average as well, and in the NASDAQ, pointing towards the downside. All four of those indices I mentioned also have that wedge formation, and it looks to me like we will pop out of it and go right back down. Omni's betting on the downside. I'm going with the Omni, traders. Do your own homework. Make sure you pull up your charts, compare your notes, and see if we do not have the same sort of analysis. So, traders, you see those charts? You see those angles? Look, that very same thing happened with that last wedge. You saw we had that little formation, up, up, down. Now we have that same look. Omni's arrows pointing down. Hey, I'm going with that analysis. Now, traders, let's go with tomorrow's trade, or I should say today's trade, for Tuesday, January 6, 2009. As you know, we have the red Omni, the S&P, the ESH9. Omni says to sell the mid to high 930s, traders. Once we get above 930, we start getting into the mid to high 930s in the March S&P. You need to go short up there, kick a few out. Traders, always place your stops in a sensible place. Never, ever trade without stops. Stops are your best friend. Make sure you size up this trade. If you're going short S&P in the 930s, you put your stop away from the action, but a stop that you can live with, and it won't wipe out your account. You know how that works. So your stop has to, of course, fit your account size, but stops, basically, traders, are dictated by market volatility and not by what you think a stop should be based on your account size. So you got to watch you don't get caught up in that. You know, people get caught up in this mindset, whereas, let's say, for instance, as an example, I have $5,000 in my account. I'm going in, my stop has to be $250 based on the size of my account. That is not the way to play this game, traders. This is the big brass ring. It's the big kahuna. You need the stops to be dictated by volatility. Depending upon what you've seen in the last few days, depends upon how wide your stop needs to be. Keep that in mind. Wide volatility requires wide stops. Volatility comes in a little, your stops can come in a little. All right, so if you're going to sell this thing in the mid to high 930s, you're going to place your stop in a sensible place. You gold members and higher, you premium members, you know where the stop's going to be. Just come to my site and take a look at where the stop belongs. Omni's profit objective is the low 900s, below the teens, traders. I think if Omni is right, and I believe it always is, the market will come down after hitting the mid-930s, should have some support at 917, and then break down to the low 900s, below the teens, somewhere between 905 and 900 is likely where this market could go if, in fact, it goes down. Now, traders, once again, I will say, me as a human emotions, right? You know, we all have them. I looked at the charts and went, oh boy, it's going to be a bullish Omni. But then when Omni came out, Omni said, no, 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 we're going down. And I always follow the Omni. You know me, I do a trading plan. I come up with the trading plan the night before a market is going to trade. So for tonight, I have my plan set for Tuesday. I write the plan down, I leave it on my desk, and I act that plan out to the letter when the markets do trade. I did that yesterday. I was very patient. I waited for my level. I was able to buy practically the lows. The market rallied up to my first resistance. I started bailing out. I stuck to my plan. First you plan a trade, then you trade the plan. Traders, believe me, if you're going to make it through 2009, you better have a plan each day, and you better have the discipline to stick to that plan. If you don't have the discipline to stick to the plan, one of the things I can help you with the most at my website is when you're in my training classes, I teach you the mentality behind how to enact your plan, how to keep your emotions out of trading, and all of the proper mental techniques that are necessary to become a trader for life. I help you with all of that, and traders, I kid you not, some of the most important parts of this game is the mentality. What you're thinking can so much affect the outcome of your trading. You need to learn how to get your emotions out of trading, and I teach that all the time. Make sure you come on down to my site. It's www.livewithoscar.com. Grab a free membership, traders, and let me teach you how to keep that money in your account and stop losing it to those fund managers. All right, traders. Listen, there's a lot of good stuff happening at the Omni Trading Academy. We have classes, we have on-demand classes, we have live interactive courses. During the day when I have the time, I lend out my desktop and I teach classes live as they happen. We record them and put them in a library for you to come see. So traders, it's all about learning. There's almost 400 videos now on my YouTube spot. If you don't know how you found this YouTube video, simply go to www.youtube.com/futuresanalysts. There you will find almost 400 training videos, a lot like the one you've seen tonight. Traders, make sure you do your studying. Make sure you come on down to the chat rooms. Never trade alone. Traders, I tell this to all my Omniacs, and many of them write back to me and tell me, boy, Oscar, one of the best things you've ever shown me is to not trade alone, to be in a room full of other Omniacs, all helping one another understand these markets. So do yourselves a favor and don't trade alone. And traders, even if this thing does go up tomorrow and Omni gets stopped out, don't fall in love with the upside. This is a bear market. There's a lot of bad news reports, i.e. reports from the government coming out this week. Make sure you do not get caught up in this emotional rally that you've seen the last couple of days. Let the Omni guide you on the downside. We'll see what happens with that. All right, traders, thank you so much for watching these videos. Make sure you come on down to the site. Give me a call day or night anytime, 702-629-4755. And say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.